With talk of a looming recession and rising inflation, the debate on renting versus buying a home in 2023 is a major talking point. Some recommend waiting, while others are bullish about the market. The truth is, there are a huge number of factors to take on board, both short and long term when thinking of buying. So in today's video, we'll be focusing on the 5-year rule and why it's the first rule you need to consider before digging deeper into the numbers. As you know, buying a home is one of the biggest financial decisions that most people will make in their lifetime. It's a significant investment that requires a lot of consideration and planning. The 5-year rule states that you should only buy a home if you plan to stay in it for at least 5 years. The reasoning behind this is that it typically takes about 5 years for the equity in a home to grow enough to cover the cost of buying and selling. If you plan on staying in a home for less than 5 years, it may be more cost-effective to rent instead of buying. Let's dive deeper into the pros and cons of both options. Renting a home can be a good option for those who are not ready to commit to a long-term mortgage. With renting, you have the flexibility to move frequently, which is especially helpful for people who are not sure where they want to settle down, or who have careers that require frequent relocation. Additionally, renting can be more cost-effective in the short term, as it often requires lower upfront costs than buying a home. However, renting also has its downsides. One major disadvantage is that it is not a long-term investment. Unlike homeownership, renters do not build equity in the property they are living in. Additionally, renting can be less stable than owning a home. Your landlord can decide to sell the property or choose not to renew your lease, leaving you with the task of finding a new home. Buying a home, on the other hand, can provide many long-term benefits. Homeownership is often seen as a sign of financial stability and can be an excellent investment opportunity. As you pay off your mortgage, you build equity in your home, which can be used for future investments or to help fund your retirement. Additionally, owning a home gives you the freedom to make improvements and changes to the property to suit your needs and preferences. However, buying a home is not without its risks. The upfront costs of purchasing a home can be significant, with down payments, closing costs, and other fees. Additionally, owning a home can be less flexible than renting, as it requires a long-term commitment to the property. If you need to move frequently or have a job that requires relocation, owning a home may not be the best option for you. So how does the 5-year rule fit into this equation? As we mentioned earlier, the rule states that you should only buy a home if you plan to stay in it for at least 5 years. This is because the costs associated with buying and selling a home can be significant, and it often takes several years for the equity in your home to grow enough to cover those costs. Let's break this down further. Suppose you purchase a home for $400,000 with a 20% down payment of $80,000. Additionally, you will have to pay closing costs, which can range from 2 to 7% of the purchase price, or $8,000 to $28,000 in this case. This means that the total upfront cost of buying this home could be between $88,000 and $108,000. Now, suppose you decide to sell the home after 2 years. If you were to sell the home for $450,000, you would make a profit of $50,000, right? Not necessarily. You also have to factor in real estate agent fees, which can be anywhere from 2 to 6% of the sale price. In this case, you could be paying anywhere from $9,000 to $27,000 in real estate fees. When you subtract the closing costs and the real estate fees from the profit, you may not end up with as much as you anticipated. For example, if you paid $15,000 in closing costs and $18,000 in real estate fees, your profit would only be $17,000, which is not enough to cover the upfront costs of buying the home. Unless the cost of rent over this period was greater than the mortgage and the $3,000 you lost in fees, then the whole thing would have been a waste of time and money. This is where the 5-year rule comes into play. If you plan on staying in a home for at least 5 years, the equity in the property will likely have grown enough to cover the costs of buying and selling. This means that if you sell the home after 5 years, you will likely make a profit, even after factoring in the closing costs and real estate fees. It's important to note that the 5-year rule is not a hard and fast rule, and there are other factors to consider when deciding whether to rent or buy a home. Some of these factors include affordability. Can you afford to make a down payment and pay for the ongoing expenses of owning a home, such as mortgage payments, property taxes, and maintenance costs? Market trends. Is it a buyer's or seller's market in your area? Are home prices likely to increase or decrease in the near future? Lifestyle. Do you value stability and long-term investments, or do you prefer the flexibility of renting? Future plans. Do you plan on staying in the area for a long time, or do you anticipate moving in the near future? The decision to rent or buy a home in 2023 is a complex one that requires careful consideration of several factors. The 5-year rule is a helpful guideline to follow when deciding whether to buy a home, but it's important to remember that it's not a one-size-fits-all solution. Ultimately, the decision to rent or buy a home will depend on your personal financial situation, lifestyle, and future plans. Thanks for watching, and until next time.